Hi, this is Pitambaran Achyutan Pisharadi from PTM Advisors Private Limited. In the morning, I had received a message in the group that they want to know the details regarding the silver micro trading. So I will be giving you a brief explanation of how this commodity can be traded and what are the different commodities in silver. So if you see that there are three commodities that are coming under silver. One is the silver, big silver, which is of 30 kg, and the expiry available for trading is 5th December and 3rd March. And the margin required for one lot would be approximately 21,000, 2,10,000. In case of silver M, the lot size is 5 kg and it is available in on with different expiries like 30th November, 28th February and 28th April. Here the margin requirement would be approximately 35,000 per lot. And in the case of silver micro, which we recommend to trade, the lot size is 1 kg and the expiry is available for trading is 30th November, 28th February 2023 and 28th April 2023. And the margin required for one lot is 7,000 rupees. Now, we have to understand the profitability and the M2M. So if you see, for every 1 rupee move, you will be facing a profit or an M2M of 1 rupee. So for every 1 rupee, the profit or loss would be 1 rupee. So if the market moves by, say, 2,500 points, then you would get 2,500 rupees. Similarly, if the market falls by 2,000 points, then your M2M is also 2,000 rupees. So we have to understand that for every 1 rupee, you get 1 rupee profit or 1 rupee M2M. Now, how do we plan to trade in silver micro? So you can see that we can trade in silver micro manually or using the investment sheet, wherein you will be trading with one quantity and you're planning to buy 15 quantities when the market drops. And the target that we will be selecting is 2,500 rupees and the buy set off is 1,500 rupees. So if you start buying, what happens is that if the market comes to 36,725, then your M2M in the first lot would be 21,000. In the second lot, it would be 19,500 and so on. So your total M2M, if the market comes to 36,725, would be 1,57,500. We will be holding 15 lots and the M2M would be approximately 1,57,000. And as per the margin requirement, it would be approximately 7,000 into 15 lots, that is approximately 1,05,000. So if you total these two figures, it comes to approximately 2,62,500. It is not that the market will fall to 36,725, but we are expecting the worst. Hence, we are making a trade plan that the market will fall approximately 22,500 from where we start, because I have kept a difference of 1,500 and I am buying 15 lots. So 15 into 15, 1,500 is 22,500. And the profit that I will be earning is 2,500 rupees per trade. So if you assume that approximately 15 trades happen in 1 year, then also your return would be approximately 37,500 and it would be return will be 14.29%. Now the silver micro has a probability of moving up to 12% on a single day. We have seen that on a highly volatile day, it has moved down to 3 circuits. The first circuit is at 4%, the second is at 8%, and the third is at 12%. So, in a matter of, from whenever I was trading in silver, we have seen 3 circuits on a single day. but that does not happen on a daily basis. But once in a blue moon, black swan event, you can find that the market has moved by 12%. So we are always considering the worst scenario, so that if the market falls, we are very comfortable because we know what is the maximum M to M and what is the maximum margin that is required for trading. Secondly, if there is any issues that the market is tanking, then we can always change this 1500 to say 2000 or 2500 after a 5 or 6 trades are executed. If we feel that the market is going to tank or there is some bad news, then we can change our set off from 1500 to either 2000 or 2500, because we are not placing all the trades in one go. So we always have the opportunity to adjust if there is a big fall. Similarly, the trades that we are expecting is one trade per month. I'm not saying that every month you will get one trade. You may get more trades, or we are calculating the least points that only 15 trades are done in a year. It can be possible that you get 30 trades or 40 trades, then your profitability will depend on that point. But we are considering the least possible trades. Okay. Now, one more thing that we have to understand, that we will only buy and play, we will never sell and play. Because on the long run, if you look at a chart, it is always showing that silver micro is bullish and it should always be bought at every fall. So using these two things, we have decided that whether we take the currency or USDI currency, Nifty, Bank Nifty or silver micro, it always moves in a higher time frame. So it is always advisable to take the position in that manner. Now I can show you the silver micro trend candle, and if I look into it monthly chart, it will be very evident that the overall scenario of silver micro is bullish. So you can see that you're not getting any red candles in between. There is only a small red candle. It's not that the market will not come down, but whenever the market comes down, it's a good opportunity to buy. Now, since this is available only for a shorter period, that is the reason why it is not showing you mini data. But overall, if you see that the red candles that are coming here is less, and this is the indicator that we have developed. And if you see on a daily chart also, you can see the same thing, that it is mostly in the bullish phase. So at every fall, you have to buy. You can see that there was a fall and immediately it rallied. So that is the reason why we are saying buy at every fall. So it's not that we have to start buying here. Whenever the market has tanked to some levels, then you start your buying. So it will always benefit you. From this level also, if you start to buy up to 51,000, 3 or 4 trades is possible. So you always get good profits when the market rises. The second thing that you can do is that the first lot that you buy, you don't book profit in that first lot. You wait for a substantial profit. That is depending upon the client's, risk taking capacity. And if you see in a overall period, you can see that it has gone up to 73 levels. So we are expecting that from 50, 60 levels, it can come down by 22,000. That means whatever is there in the upside, we are expecting 2 times fall. So from this current level, it is 15K higher. So we are expecting 1.5 times downside. So that is why we are planning it in this way. Now, depending upon your capital and your profitability, you can always increase this quantity as per your capital deployed. For one lot, you need 2,62,500, but this is not required in the beginning, but you should have that provision for buying if the market tanks. So without this capital, don't venture into silver micro. If you are venturing, you should have this capital, or you should be in a position to transfer the fund as and when is required. So kindly make a note of this. And I would also like to inform you that I'm not a SEBI registered analyst, but I am helping fellow traders with simple strategies where you can get a decent return without making any chart calculations or indicators in the chart. So I hope you liked watching this video, and you can share it with your friends and relatives if you find that there is good content in this video. Thank you for watching.